Thank you, Trevor, and the Maritime Standard for the invite to speak at this distinguished conference today. So I'm going to talk about the volatility in the market and the geopolitics and the all other issues that's impacting our business and industry today. And before I start the presentation and dig deep into the slides, I'd like to see, or I'd like to ask a question and wanted to see what's the audience view on geopolitics being a financial impact on the financial statements. Would you agree that geopolitics today is a B&L item which we have to forecast in our budget and forecasting? Can I see show of hands if people agree to that concept? Okay, thank you. So I'm going to dig deep into the presentation, which is basically the geopolitical shocks and the financial catalyst for the industry transformation. And as you can see, I mean, we as a region, we account for about 20% of the global energy within the GCC area and 20% of the gas global supply to the world. So that's a very remarkable percentage when it comes to security of energy and so on and so forth. And I think as a region, we've seen quite a mature level of stability and people started to kind of look into energy security as a very important element, and that has been evidenced by the recent geopolitical situations that we have witnessed the past few months and the conflict that took place. And despite all of that, we've seen that the oil price did not really volatile comparing to 2 or 3 decades ago, where the oil prices volatile quite massively when there was a very simple geopolitical or a conflict within the region. And in terms of preparation for that, if we look at the main areas which basically impacting our industry, we as a geographical structure, our region is one of the main important jurisdiction, if you like, for the shipping. And then we have the Taiwan Strait, which is accounting for 50% of the trade. And if there is any geopolitical situation that's impacting that strait, then I think we will also have a similar situation where we will be impacting as an industry by a very, very high percentage. The tit-for-tat dispute between China and the US also has its own impact on the shipping industry. We've seen a reduction in shipbuilding in China this year for about 25%, or in terms of monetary values, about $40 billion. And again, I mean, the regulations change and the ownership change and so on and so forth is also impacting ship owners big time, because there's a lot of financing, transactions and leasing structures that has been built on the back of Chinese leasing houses and banks, and this is given the recent conflict between China and America and the USTR fees. This is all impacting in big time. Companies are accounting for $1.5 billion to $2 billion in terms of fees next year, and if this is not going to be resolved anytime soon, this is also going to be a structure change in the cost of the shipping industry going forward. On a bigger picture, I think in terms of economic headwinds, this year has been a quite challenging year for the industry and for the economic in general, because the GDP in general has been growing very, very slow. So this year we've seen about 2.6% growth rate, which is basically the lowest since COVID, and that's not very promising for industry that aims for about 5% growth rate to kind of sustain the business growing and the expansion in the fleet and also in the technology and so on and so forth. The other element is the interest rate. So the interest rate, we estimated the interest rate to start declining since maybe July, August 2024, but that hasn't been the case. It remained stable for some time, and we've seen the first cut in September 2025, which actually has also impacted capital and capital allocation and so on and so forth. And when it comes to capital allocation, of course, I mean, interest rate plays an important role in terms of capital availability and capital allocation. And today we're faced with many challenges and issues when it comes to the shipping industry in terms of what's the right technology, what's the right operation scheme or operation model, and so on and so forth. And for that, I think we see ourselves as shipping companies are a bit challenged, because the majority of us are actually over-leveraged when we look at the financial position of ourselves. So a recent research was done by one of the leading banks shows that 60% of the shipping companies are actually over-leveraged. And when I say over-leveraged, I mean they are leveraged at 60% or above. So that doesn't really give a room for companies to, especially for small and medium companies, to really expand and look into, you know, phases where they can come up with and adopt new solutions and a new expansion plan. And when it comes to operation and the relocation of capital, I think we should really look into what we call 30 by 30, and that's basically, you know, relocating 30% of your capital by 2030 towards three very important elements in my view. Operations, vessel operations, number one, and decarbonization, number two, and digitalization, number three. And you can play with the rest of the percentage as you want, basically in terms of, you know, death payment, in terms of dividends, and so on and so forth. But it's very, very important that as companies and industry, we should really look into relocating our capital by 2030 to ensure that we have a long-term sustainable business and a long-term future-proof operation. And of course, spoke about technology, and it's very, very important element. So. Technology and innovation is the name of the game these days, and I do encourage to invest in technology and innovation, but before we go ahead and do it, we really have to ask ourselves whether we are investing in a technology and in innovation that's going to survive the next decades or even couple of decades of the political uphills, because we concluded that, you know, geopolitics is going to play an important role in our industry. For that reason, we really need to invest in technology that's going to sustain that, you know, difficulty and that issue. And for that, I think I've listed what I call ABC test, which is basically benchmarking our technology investment towards those three elements, which is AI automation, blockchain, and cybersecurity. And when it comes to AI and automation, I mean, there's a lot of solutions out there, but are they really making sense? Are they really, you know, giving us the result and the outcome that we are after? And as we saw earlier from Dr. Ibrahim, I mean, he has a fantastic presentation, and one of the questions he was, you know, answering there is the market and how he predicted the market, and he gave a full-fledged of how he predicted the market. I asked the same question to an AI tool, and the answer I got is the market might go up, might go down, or might stay the same. So here we go. So it's very, very important to really invest in a technology that's going to make sense, because if your technology is not going to give you the right returns, the right payback, then it's not the right technology for you. Cybersecurity, touch base on cybersecurity in the previous slide. I think it's a very, very important element which we really need to think about. The numbers that's coming from the cybersecurity companies and the analysis that we've seen so far is quite alarming. So last year, I think there is about 9 billion incidents that have been reported. There is an increase of 60% of security incidents in the first half of 2025. Last year, we've seen $250 million loss in cargo thefts and so on and so forth. So it's a really an area which we believe that we are underinvesting. I mean, if you look at the numbers, they speak for themselves. There is a market estimated to be at the range of $18 billion for cybersecurity investment. Today, we are only estimating maybe 5.8 to be exact billion dollars in terms of investment available for cybersecurity. And for that, we have a huge gap of $12 billion worth of investment opportunity in that space. And guess what? The return on that investment is 3 to 1. And I mean by that, every dollar you spend is going to save you $3 in loss, in cybersecurity loss. So that's a very, very profitable business in all ways. Of course, the elephant in the room, green transition. So this is a very interesting topic, because this slide is actually prepared prior to the voting of the IMO voting that took place recently. So the estimation from IMO and all other related, the World Bank and so on and so forth, that we need about $1.5 trillion worth of investment between 2025 and 2050 to be able to meet the net zero emission by 2050. Now, with this, we need to at least spend $500 billion in solutions to be able to meet the first initial target of 20% reduction in emissions by 2030. Now, this was the case, as I mentioned before, the voting. Now, the voting has, took place. The IMO, or the members of the IMO, decided to push this for 1 year. So what does that mean for the industry from a financial perspective? I think we would be looking at a gap of $200 billion that we need to account for because of this delay. Now, again, I mean, the earlier question was, who should finance or who should, support in kind of, investing in this technology or solutions to meet the target. The question now is not only who is going to invest in that $500 million that we are lacking, but who is going to support the cost of the delay of that solution. And of course, the great pause, and what does it mean for the shipping industry? So we have a few scenarios where we expect things to turn around in the next year or so. But I think the rising point is I think probably the fragmentation, where regionally things will probably be different from one region to another. And I think for that, until we have more clarity, I think we should maybe stay focused on regional compliance, see what the region is doing, and then comply with that. Because I think the IMO pause is just a short-term pause, as Dr. Ibrahim and the all other panelists have indicated during the discussions that we had earlier. So it's a short-term pause, but again, I mean, on the long run, we really need to have the right strategy and the right solution to stay connected and relevant to the market.
By this, I think otherwise, if I went to the paper, then it would take longer. I wanted to focus on the technical bit, at least, since majority of the areas has been covered, and very much appreciated, everyone.